There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. I'm Nadine Blaney, and it's nice to be here with you on this Monday afternoon, so the first day of a brand new trading week. And of course, we have been watching this market like a little bit choppy, I suppose, to start. We were higher out of the gates, but pretty steady towards this 4 p.m. mark here in Sydney. Look, a real standout has been the gold sector. Also iron ore. I mean, iron ore prices are going really well. So yeah, gold has helped lift this market overall. In fact, I think that's one of the key thematics today, and it came up on the call as well again today. I don't mind giving it away, but Evolution Mining was up for discussion. One of my guests was a strong buy. My other guest wouldn't consider owning gold. So I think it's worthwhile listening to today's episode of the call, just off the top even, to hear sort of opposing views on gold and how it fits into a portfolio, and of course whether it's still a buy after some of the share price appreciation that we've seen as of yet. Now, the stock of the day on the call was Reece. And again, worthwhile listening just to get a take on this strategy. So announcing this share buyback, one of the best performers on the 200, if not the best actually, towards the end of the session. One of my guests said that it reeks of desperation. So yeah, worthwhile again to check out the stock of the day, which is online at ausbiz.com.au for those of you listening to this in podcast form. Now, Asian action. So again, pretty choppy trade in Asia, but Chinese markets were lifting. So there was a rally happening in Apple suppliers, also on this promise of a talk and perhaps even a visit to China by the US President Donald Trump. They said that they've made progress on an agreement over TikTok, having the American business in American hands. Interesting to note that Goldman Sachs says that the developments suggest that US-China headlines are likely to stay stable or even improve over the next few months. So a bit of positivity to start this Monday. How is it flowing through? I have to show you this picture of gold. I mean, today, earlier even, the gains were more significant for some. Right now, let's bring it up, can we? Okay, we're not getting that up yet, but I can tell you that at one point, Newmont was up by, 6%, close to 7%. And some of the best performers today are in the gold space. So you'll have to trust me on that one. Iron ore, so some of those big miners looking good as well. Although BHP seems to have been taking a turn, we're really overdoing it with that champion iron as well. Fortescue is one of the biggest performers, and so we'll keep an eye on that. Weighing on the market, though, generally speaking, was the energy sector. In fact, when we look at this market, we've got, out of the sectors, 6 out of 11 higher, so pretty split down the middle, but materials was the best performing sector, gaining 2.6%. Santos, you mentioned, or you would have seen there, it's slightly in positive territory. Its Barossa LNG project in the Timor Sea is beginning production operations. It also had a broker upgrade coming through. Newmont, there you go, up by 4.7%. Selling as well, it's 13% holding in Orla Mining, which is based in North America. Volt Minerals also hitting a 12-year high on a upbeat production outlook. But New Hope, well, that was trading ex-div today, down by about 7%. Reece, as I mentioned, we learned it's targeting a $250 million off-market share buyback. It was the best performer today. Looks like it'll end that way as well. Viva Energy, though, has seen its share price decline today So Jevon Bozo, the CEO of its convenience and mobility business, will be leaving, and look at that, really taking a toll on the share price. Meantime, Regis has noted a negative impact for staffing costs because of the government's update of the residential aged care funding system, really getting hammered off by 27% to $6.73. And in the smaller end today, check out Star Pharma up 84% after signing a licensing agreement with Genentech to help develop new cancer therapies. Wow, 84%, you don't see that very often. Of course, a small company, only a 23-cent share. Okay, let's get some analysis on it all. Josh Gilbert, he is joining us from eToro. Set your clock by Josh being here with us on a Monday. Josh, so what do you make of the Asian session overall?
Yeah, hi Nadine, great to be with you as always. It was a bit of a quiet start to the week, really, wasn't it? I think we've seen volatility drop pretty significantly, in the last sort of few months, but I think particularly over the last week, especially since that sort of Fed decision as well, that sort of took, I think, quite a bit of uncertainty away from markets. And the biggest risk, I think I mentioned last week going into it, was that we might not get quite a dovish Fed as the market was sort of pricing in, but dot plots showing that 2 cuts for the rest of the year and then further easing into 2026. And I think the market took that pretty well. I think today the ASX sort of building on the back of what was a pretty decent week from US markets. I think the third week of gains, the S&P up over 1%, all three of the major indexes up over 1%. So I think we're just sort of following on from a pretty decent end to last week, a slightly quieter week ahead this week, a couple of big macro moves, but other than that, especially from a reporting season, earnings season perspective, it's pretty quiet.
Yeah, pretty quiet. Now, you mentioned me, or you may have heard me mentioning, I guess, some of the more positivity around the China-US relationship. Does that have legs in your view?
Yeah, I think so. I think we've already seen so far this year that, there's, I think, a deal to be done. And I think we've ever since that sort of April, Liberation Day, and ever since then, I think Trump has sort of shown that he has been willing to sort of negotiate, a lot more and sort of bring conversations to the table. I don't think he's someone who is wanted to sort of really create chaos in markets. I think he just wants to get what he wants. And I think by what he did on Liberation Day and, how sort of other countries reacted, it just sort of shows that he can ultimately strong arm nations. But when we do have the sort of the two biggest economies in the world still going sort of head to head, it is nice. And I think it will be a relief for markets if we do end up seeing, those tensions subside. And if there's, deals that can be done, I certainly think it looks like we're making progress. So I think, again, that will be more good news for markets if we do end up seeing that come through at some point this year.
Still, though, a lot of the sentiment is riding on interest rate cuts coming through in the United States in particular after we saw the Fed cut last week. Now, we do have quite a lot of Fed speak coming up, as we usually do in the wake of these types of, policy announcements. So when we think about John Williams, Thomas Barkin, Stephen Moran, all speaking at separate events on Monday. We've got Raphael Bostic, Michelle Bowman on Tuesday. Also, the Fed Chair Jerome Powell speaking on Tuesday. I mean, we're going to get a lot of meat on the bones, hopefully, around where rates will head to from here, correct?
Yeah, and I think you always get sort of slightly different views from all of them. And I think that will be sort of an interesting, I think that will make it interesting for markets this week, especially because we had that good news last week. I'm sure that, they'll probably be quite quick to try and maybe push back a little bit on expectations, I think, because, we've got that labour market that is weakening. But I think outside of that, we had retail sales data last week that showed actually that the consumer is holding up pretty well in the US. And obviously we still have inflation numbers that, again, shows that it continues to sort of be sticky. So I think they are in a bit of a tricky position in terms of, still wanting to make sure they bring inflation under control while sort of still waiting to see the impact of tariffs. But also at the same time, there's clear need to support the labour market. The numbers that we've had from the jobs data just recently goes to sort of show that. So I think that we will get 2 cuts for the rest of this year. And I think maybe what will be really interesting for me from Fed speakers this week will be that I think more about what we're going to get going into sort of 2026 and that direction of inflation. We obviously get US PCE, which is the Fed's sort of preferred inflation gauge towards the end of the week. And I think that will be a really interesting number. And I think it will give us a bit of a better idea of where we're sort of, going to probably see rates go coming into 2026.
Yeah, so the dollar began the week pretty steady. We don't have any data in Europe, and we've got futures pointing to a pretty subdued session, at least so far. It is quite a calm week on the economic front. It feels as if maybe it's a time to catch our breath, don't you think, as investors?
Yeah, it does feel a bit like that, especially when you come off the back of a US earnings season, you come off the back of obviously Australian reporting season, which is always pretty hectic, and then, probably arguably the biggest Fed decision of the year. We expected that cut, but I think it was more that sort of dot plot expectation. Locally, we've obviously got CPI data. Last month's number obviously came in pretty hot. We came in at 2.8%. Here in Oz, and that was obviously a bit of a reversal from the numbers that we'd seen, recently or prior to that. So it's a pretty big print this week, I think. Obviously, as we know, the RBA obviously looked to that quarterly data, but they wouldn't have liked that print that we got last month. So if we do see a print coming in around that sort of same number, if it comes in hotter than expected, we'll obviously get some support there for the Aussie dollar. Opposite of that, though, if we get a pretty cool print, then it might push up those expectations of a November cut, which is when markets are sort of pricing in that next cut for the RBA. But yeah, look, I think that the Aussie dollar is obviously performing pretty well against the US in recent weeks, given the expectations, the differentials between rate cut expectations between both central banks.
Is there anything on the corporate front that you can think of coming through this week?
Look, I don't think there's probably too much that we're looking to. There's Micron Technology. They've got earnings coming through, which again we've sort of been looking towards those sort of chip names that have been really in focus. Obviously, we had the Nvidia investment into Intel last week, so again that will be one that we probably keep an eye on. It's probably one of the bigger corporate events. And we're also keeping a close eye on Apple. Obviously, the sort of iPhone came through last week. There were a few people queuing up, I saw in Bondi this week to
Really?
sort of grab one. Sort of throws you back to maybe 10 years ago. But look, I think from what we can see so far, from a few updates that we've seen on the street, demand seems to be pretty good. Early signs sort of suggesting that ahead of expectation, and I think that could be down to that iPhone Air. It's something that we've not seen really. I think it's probably one of their biggest moves that we've seen from Apple in years. Obviously, a much slimmer phone, and again, we know pretty much most people have an iPhone, and they're pretty bulky these days as well. So I think if that upgrade cycle can come through and we can get better updates on that this week, it could be a good week for Apple. And of course, for me, it still relies on AI strategy, but really the core business is those iPhone sales. So if they're good, then that could be good news for them this week.
Wow, I didn't know that people still lined up to get anything Apple. Interesting. Okay, look, it's sort of par for the course. Bitcoin's coming under a little bit of pressure. What has the sentiment been like toward crypto?
Yeah, we've kind of had a mixed, or probably a tepid, I think, month or two. Seeing some altcoins outperform shorter term. A few catalysts coming through, from new collaborations, etc., within the space. But Bitcoin, particularly, has probably staying pretty range bound over the last month. I think that rate cut is pretty positive. Who's coming in to the ETF this year, the Bitcoin ETF, or the fourth largest flows into any ETF this year has been that BTC ETF. So again, really sort of standing out from an institutional perspective. However, we do see sort of limited lack of catalysts really short term over the next sort of month or so, especially when we think about assets sort of sitting at all-time highs. So for us, we sort of probably need something, I think, coming from Mr. Donald Trump, or some positivity coming from the White House. Again, at the start of the year, there was lots of conversation from the White House coming through from whether that be regulation updates, or it being sort of added into reserves and things like that. For us, so short term, gold is the asset that's sort of really standing out to investors. For now, obviously, one of the best performing assets this year, up 40%. So we're seeing a lot more flows into gold than we are Bitcoin at the moment.
Yeah. Well, gold is quite the story, and I do have the share price charts to show our viewers in just a moment. Josh, look, thank you as always. I hope you have a good evening, and we look forward to speaking with you soon.
Thanks, Nadine. Have a great
week. Take care. Let's get to the stock of the day before we get to gold. Reece, it was our experts Mathan Samasadam from Deep Data Analytics, and Andrew Coleman joins us from Team Invest.
I don't see the dynamics changing short term. The overall dynamic in the US construction is still weak. House prices are still weak. Bond yields are not coming down, so mortgage rates are not going to come down too much to support any of that. And bond yields are not coming down. So for me, I think still it's a tough one. But this is the thing about cycles, right? This is a cyclical. A cycle turned on it and it got hammered. And people suddenly go, it's something wrong with the business. Technically, no, it's just the cycle, right? And they've done acquisitions at the wrong side of the cycle and we've just come off.
Buyback in double digit, sort of high 20 or mid 20 PE smacks of desperation. This is an attempt to counteract the narrative after that disastrous earnings call that Reece has no idea what it's doing and has nowhere to go, which I think, by the way, was a completely unfair read of that earnings call. I think they were just being honest that they've come up with some difficulties. M&A is hard. Global M&A is harder, as Nathan points out. Global M&A across a time difference in a market that is perhaps, let's say, less ethical than the Australian business market, because who's ever thought that United States private equity was upstanding? I come from a PE background, right? This was always going to be a tough challenge for Reece.
So they would be avoiding Reece right now. Nathan's rule of thumb, if you're in a downgrade cycle, you wait for the first upgrade to come through. He's taught me well. All right, here is a look at those gold names that I was trying to show you earlier. Thank you to the production team here at AusBiz. They are an amazing crew, and I was seeking and they delivered. So there you go. Northern Star up by close to 8%. Evolution up by 6.3%. Newmont 4.7%. Genesis up by close to 13%. So shout out to Matt and to Marius for making it happen. Thanks, guys. All right, let's take a look at some of these market leaders. It was the stock of the day. Reece up by 14%. The rest of it obviously is being dominated by these gold names. Boy, and yeah, I really encourage you to go and listen to two sides of the coin from the beginning throws of the call today on gold. All right, some of those that are lagging the market: Viva Energy on that retail boss stepping down, New Hope trading ex-div. Temple & Webster was featured on the call today. It was a great episode, actually. You might want to go have a listen to the whole thing if you're going out for a walk or just have a bit of time this evening. So yeah, you'll get the verdict on Temple & Webster from those two guests. Small to mid-size end of the market: Phoenix Resources, I should say. Iron ore space up by close to 17%. And you can see there's a bit of a motley crew there for the other names. And those that were lagging: Star off by 9.5%. Echo IQ down by, close to 9% to 19 cents per share. Tonight, we get the U.S. Chicago Fed National Activity Index. As I mentioned earlier, not a big night, but we will hear from some central bankers in the United States, which is always of interest. So we'll be talking about that tomorrow morning, no doubt. Look, tomorrow we get the global PMIs for September. And so, yeah, keeping an eye on all of that. The PMI may fall in Australia for the composite PMI, and also in the United States as tariffs continue to roll through the economy there. So how'd we finish up? Well, the last of the day's trades are through the S&P ASX 200, finishing higher, 8,811, or 0.4%. So we are obviously keeping an eye on U.S. futures. They're mildly negative. There's not any big data on the horizon in Europe, as we've already discussed. So we'll be watching some of those key commodity plays to give us an indication of how our market will travel tomorrow. And we look forward to seeing you tomorrow. We're live from 9:45. In the meantime, though, I do hope you can catch up with anything you may have missed today. It's all online, ausbiz.com.au. Have a good one.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.